Welcome back to Fast Money. Another check on Netflix after earnings. The stock is down 6.25%. Lightshed Partners Rich Greenfield joins us fresh from the earnings call with more. Why is it down, Rich?
I mean, look, investors wanted faster growth. I mean, there was like a tax issue this quarter, but look, I think there was just the whisper was that they were going to have even faster growth in Q4. I mean, they're growing revenues in the mid to high teens. They're growing earnings 30%. This thing is just an execution story. They don't, generally blow things out anymore. It's just a solid executor that grinds higher over time. I mean, the stock was at this level 12 days ago, Melissa. So, I don't think there's any panic or any collapse here. I think in reality, the only real focus that investors have, post-call is actually not about the earnings. Post-call, the only discussion is what was with the answer on M&A. Are they a bidder for Warner Brothers for the studio and streaming? Are they not? Obviously, we all listened to your David Faber report earlier that they were amongst the interested parties. And so everyone's just trying to figure out, who's bidding, what's the reality that anything happens, and is it good or bad?
So let's say Netflix is amongst the bidders. How can you see this make sense for a Netflix investor, a Netflix shareholder? Would they want to buy all of it? Would they want to buy pieces of it? I mean, what would be your fantasy Netflix WBD tie-up?
Look, the fantasy would be you wouldn't even really want HBO because it's still a network. It's still tied into Amazon channels. It's tied into Charter and Comcast and DirecTV. What you'd really want is just the IP trove of Warner Brothers. If you could literally just extract the Warner Brothers asset, that would be the piece that I'm sure is most interesting to Netflix. I think, HBO, I mean, it's funny, you think about that Albanian army comment that Jeff Bewkes made so many years ago, Melissa, where he joked that the Albanian army is not going to take over the world. And the thought that, Netflix could actually buy HBO and Warner Brothers is obviously sort of ironic when you think about it. But look, there is no doubt they love IP. They've never made a huge IP acquisition. They've bought the Ronald Dahl library. They've bought little things, but they've never made this would be a, $50-60 billion acquisition of the Warner Brothers studio and HBO. That's a massive transaction for Netflix. And you have to wonder, is that really the best use of capital for the company? And look, we know there's competition. And so they're going to face competition from lots of parties from this. Netflix generally in these battles doesn't win. You look at sports rights bidding. They generally don't get sucked in and overpay in the middle of those battles. And so they're certainly not the only bidder here. I believe Comcast would have a lot of interest. Obviously, we know Paramount has a tremendous amount of interest. So even if they're interested, which I don't deny that there could be interest, it's hard to see how they walk away the winner given their price discipline that they've always exhibited.
Rich, it's Karen. Thanks for being on. So can you talk to me about the ad sales and how you see that evolving from here?
Look, they're still very early in their journey. I mean, it's growing, it's doubling. But I mean, these are, in the scheme of Netflix, Karen, these are still small numbers. They need to bring on, they're still early in bringing on advertisers, getting more customers or more subscribers, I should say, onto the ad tier. This is a multi-billion-dollar business, but, when you compare it to the scale of other companies in the ad space, I mean, they're dwarfed by the Metas and the Googles, let alone, companies like Disney, and Paramount, even CBS. And so they're growing rapidly. The ad tier has certainly, think about what happened. If we just go back in time, the reason they launched advertising, remember, is they missed and revenue growth was sub 10%. And they were like, how do we start growing again? And it was a combination of launching the ad tier and introducing the restrictions on password sharing. And those two things have driven the company from high single-digit revenue growth back into the high teens. So they've succeeded in restoring rapid growth to this company, growing earnings, at 30% plus this year. And so there is really good growth dynamics that's been restarted, but they are just scratching the surface. Their ad experience is actually relatively unexciting. Ads on Netflix look like ads on TV. I think that's the opportunity to make it a very different experience over the next few years.
Rich, in this era where there's so much M&A going on, potentially, the sands are really shifting. Could you cobble together Frankenstein streaming platform from all these different pieces that would be a true competitor to Netflix, or at least maybe eat into some of that growth that Netflix is banking on?
It all depends on, putting content studios together. I don't think solves the problem. I mean, look, Paramount is obviously interested in buying Warner Brothers. They think this will help them. I don't doubt that there is value to owning the assets. The reality is, in Hollywood, Netflix has shown money talks. Paramount, in just the last 6 weeks, Melissa, has shown they got the UFC. They took it away from ESPN. They took the Duffer Brothers away from Netflix. They won a highly contested bidding war for A24's Nicole Kidman series. Like, everything you want in Hollywood and in sports is available if you're willing to overpay for it and outbid everybody else. And so if David Ellison and the Ellison family has more money than everyone else, I don't actually know why you need to buy anything. I think you can sort of execute the Netflix playbook of just take everything you want by overpaying, outbidding everybody else, and leveraging your financial position.